From Marbella to Gibraltar on 91.9, this is Talk Radio Europe, your voice in Spain.
Welcome back.
Tonight with Lisa Grant.
Thank you. Welcome back. And waiting on the phone for me right now is Jonathan Davis, money manager for his weekly economic clinic. Hello.
Hi.
How are you?
Happy Christmas. I'm brilliant. How are you?
I'm all right, thanks. How was your crimbo? Good, I hope.
It was lovely. Very quiet, just myself and our children, but it was absolutely beautiful. We loved every minute.
Good.
Except, of course, the hour upon hour when the children were screaming at each other because it was their toy. No, it's their toy. No, it's their toy. You get the point.
Yeah, a friend of mine actually bought her son a Kinect. Hands-free play system, something or other. Anyway, the parents haven't got a look in yet, and they're actually dying to jump on it.
Yeah, one of these days people will realise that Christmas is not for children, it's for adults.
So, we're going to do a review of the year this year. This evening, I should say. And let's just say it's been a bit of a bumpy ride, hasn't it, really?
Well, I think every year is a bumpy ride, as it happens. But what we've been seeing in 2011 is, in my view, the culmination of the disastrous policies of governments right across the world, particularly, of course, in the EU and indeed in America, over the past, decades, and made even worse by all the money printing that they did 2 or 3 years ago, which got the politicians and the bankers out of a fix, but it actually made it worse for the rest of us. So it has been bumpy, but I think next year or 2013 is when it all kicks off seriously. We'll see major devaluation of the euro. We've already seen that starting. We'll see the dollar revaluing. We've already seen that starting, as I've been talking about the last few months. Stock markets will be really going through the floor, and property in those countries where they haven't yet gone through the floor will indeed be doing so. So people really need to watch out next year. Mm-hmm. And unemployment's going to rise sharply also next year in those countries where it hasn't yet risen. I don't make the rules. I just analyse.
I know, Jonathan, I always love talking to you. There's such a lot of happy news that you convey.
Hey, 10 years ago, no, of course I understand the point you're making, but 10 years ago, people need to get to grips with this reality.
Yeah, I know.
10 years ago, we had $80,000 billion, $80 trillion of debt globally. 10 years later, $220 trillion. Now, that's clearly about a trebling of the debt. But did we see a trebling of the size of economies? No, we didn't. Italy, for example, hasn't grown a euro in 10 years. The United Kingdom hasn't grown a pound in 5 years. That's the state we're in because of disastrous economic policies by central banks and politicians.
Now, there were several subjects that you particularly said stuck in your mind over this year. Let's start with the US downgrade.
Well, it's the biggest move in history. The largest economy on the planet, the United States, in 200-odd years of its existence, it's always, in effect, had a AAA rating, or whatever it was called before the actual phrase AAA came about. Well, in August this year, it was downgraded, which meant that the rating agencies were starting to wake up to reality that the United States is the most indebted country, listen, in the history of the planet. There's no way they're going to pay those debts. In many ways, they're just as badly off as Greece or Italy or the United Kingdom. It's just different, but they're just as badly off. And when America goes down, I tell you, that's it. It's good night, Vienna.
What do you think is the most contributing factor to America being in the situation that it's become into?
Yeah, well, it started from Clinton in the 90s when he just borrowed like Billy-O, before that, Ronald Reagan just borrowed like Billy-O. Clinton continued it. 2 Bushes continued it. And Obama made it even worse. You cannot imagine how much Barack Obama has loaded debt onto the American people that will never be repaid. It's all about crony capitalism. It's about pork belly politics. It's about politicians who are bought off by large corporates and large banks in order to serve the large corporates and large banks to the detriment of the people. That's why the U.S. is in an absolute... I talk about the U.S. Every country you can think of is in an absolutely dire situation.
Mm-hmm.
Do you know in America, 1 in 7 Americans are now on food stamps. 46 million Americans are on food stamps. 2.8 million children, not counting their parents, are homeless. Think about it. 1% of the American population are homeless, and that's just the kids, not counting the parents. That's how dire it is to be in America today. It's as bad as Greece or Italy.
OK, keeping Italy in mind, and then, of course, moving our attention over to Spain, your comments that we're being ruled now by not democratically elected politicians.
Well, you and I aren't in many ways, but I've talked many times about how Brussels dictates to other countries, and let's face it, no one is elected in the European Commission. You've got the MEPs, but they are about as useless as a chocolate teapot, because they have absolutely no power. It's all about the European commissioners. And the commissioners have installed, along with Merkel and Sarkozy, they've installed prime ministers in Italy and Spain, which were not elected. They're not even elected officials by the Spanish people or the Italians. What on earth is happening in this world that so-called Western democratic states have prime ministers foisted on them? What on earth is going on?
What about the UK's position with regards to not signing the treaty that was put in front of David Cameron a few weeks ago? There's been some murmurings. I mean, this is one headline that sticks in my mind, that he was the only person saying, no, I'm not going to sign it. People have come down on either side of the fence basically saying it was a good thing, and other people have said, no, it was a bad thing. You're over there. What would you say the general reaction is?
Well, the public reaction and the media reaction in the UK is that Cameron played a blinder.
Right.
He told Sarkozy where to get off. But the reality is, people need to understand what is going on. Merkel and Sarkozy wanted to rein in the banks. And the UK has got the most corrupt banking system in the world. And that's saying something compared to what's going on in Wall Street. And Cameron said, no, I'm not going to allow I'm not going to allow any regulation of the City of London. I'm going to allow them to continue their hugely corrupt practices. He walked out. The media said he played a blinder. He told Europe where to go. The reality is that the politicians are going to win, the bankers are going to win, everyone else is going to lose. And that is so obvious because look at our debt situation in the UK, for example, because of those corrupt practices. And believe me, I can go into detail about corruption if you want, but because of those corrupt practices, the UK's indebtedness is now 10 times the size of our economy. Now, you think about that. Let's say you're an average family in the UK earning, £50,000 a year, average. That would imply you've got debts of £500,000. You cannot grow your household economy if you've got debts of 10 times your income.
Jonathan, I'm just going to have to butt in while you're in mid-flow because we've got a call. Hello, caller, you're on the air.
Hello, it's a very quick one. It's
yes.
Fox in Mallorca.
Hi, hello.
We have just elected our president. I don't know what your man's talking about.
Jonathan?
Spain has just elected its president.
Yes.
Sorry, it wasn't Spain. I'm so sorry. It was Greece. That was just a slip of the tongue. It was Greece.
I had a feeling that you meant to say Greece. Yes.
I'm so sorry. But
Yeah.
You get the point I'm making.
I'm not going against them. I just like to say, put the point right.
Sorry, say that again.
It was just to put the point right.
Yes, no, that's absolutely fine. That's absolutely fine. Thank you for getting in touch. I had a
Well, indeed, thank you for correcting us. It's very important. Thank you.
No. I was going to chip in at some point when you drew breath and say I think you might be talking about Greece. Yeah, absolutely. Okay, let's move on to the next headline, and Germany putting its foot down and not printing.
Well, again, this is what all this so-called euro crisis, really, the last few months, has been about. Because the European Central Bank could have alleviated the problems, not sorted the problems, not solved the problems, but alleviated the problems and kicked the can further down the line, had Germany allowed the European Central Bank to change its rules and just print money with abandon. But in fact, the Germans have told Angela Merkel, no, it mustn't happen. So that's the reason why the EU is now in recession. That's why Greece and Italy and Belgium and Portugal and Spain are so much in the mire that they're paying a fortune to borrow any money. However, it's all short term, because whatever happens, if the ECB continues not to print for a long time with abandon, then the EU will just go into a massive depression. And when I say massive, I'm not exaggerating. It's already in recession. But you know what? Even if it does print, do you know what that will mean? That will mean that the euro will collapse, because there will be more euros in existence, and if the euro collapses, the dollar will rise, because the currency world is a zero-sum game. If the euro falls, the dollar rises, and if the dollar rises, then import costs into Europe will soar, the cost of living will soar, again the EU will be in depression. So, printing will simply kick the can down the line for a year or maybe 2 years. So, but that's been a highlight, certainly, of this year, that the Germans just didn't roll over yet, and that's the point. I think when there's a stock market crash, and I'm expecting one in the next 6 to 18 months, and Germany goes into recession because, of course, they've got no one to export to within the EU, I think Merkel will suddenly change her mind and allow the ECB to print. But again, all that will do is very short term hold off the depression. It will not solve the problem. I must ask your listeners once again: how do you solve a debt problem? By creating more debt.
Hold on, we've got another call. Hello, caller, you're on the air.
Hi, Lisa, it's Bertha here. Just a quickie. I had a YouTube report come in from one of my sources that Germany is actually printing the Deutsche Mark.
It is printing. It started now.
Yes, that they've already started not issuing it, but producing the Deutsche Mark. Jonathan,
do you know about anything about this?
Well, the suggestion from the lady is a very important one, a hugely important one, is that the Bundesbank, the German central bank, is quietly printing Deutsche Marks because there's an expectation that the euro will fall apart, so the Germans will leave the euro and go back to the Deutsche Mark. The answer is, I don't know. I haven't actually seen anything to corroborate the suggestions that I have certainly seen out in the internet. I simply don't know, but it is absolutely fascinating if it's happening, because if it is happening, no one officially is telling anyone that it's happening.
Okay, well, I'm sure it'll come to light eventually if that definitely is the case. Let's move our attention now to China and what's happening with the property crash.
Well, the lady there mentioned YouTube, and I'd invite your listeners to just well, I haven't actually done it myself, but I would invite them to go onto YouTube, and I imagine if they search for China property bubble or China property crash, they will see some fascinating news reports of China's property development for the last 10 years, which has been bigger on a per capita basis than anything anyone has ever seen on the planet in history. Bigger than the south of England, bigger than Spain up until 2006, 2007. They've got cities out there in China for a couple of million people, 21st century cities with infrastructure, hospitals, rivers, parkland, you name it, for 2 million people. They've got 10,000 people living in those cities, plural. They have got 64 million empty, never lived in dwellings. 64 million. To give you an indication of the size of that, never lived in properties. In the UK, there are 24 million dwellings in total. And in China, they've got 3 times that, investment properties never lived in. And what's been happening in the last few months is that property prices in China have been falling anywhere from 30 to 60%. And as I said to you a few weeks ago, you can see the Great Wall of China from space. They'll be able to see the great Chinese property crash from Alpha Centauri. And when China goes down, which I believe it's in recession now, forget this 10% per annum growth nonsense. I believe they're in recession right now. As China goes down, again, yet another major calamity for the global economy.
You mentioned before how what happens in America affects all of us around the world. With the primaries literally weeks away now, when there's a presidential primary and all the attention is put on that, how does that generally affect the markets?
Well, actually, you'd think notionally that the incumbent president would do everything he can to make sure that everyone's happy in the run-up to the November election. The November 2008 election, remember, was after the 2008 stock market crash. From October 2007 to October 2008, the stock market fell 35-40%. And then 3 weeks later or so, they had the election, and Obama came in. So as it happens, the presidential year is not traditionally a brilliant year for the stock market. And as it happens, as I say, our firm, we're economists and wealth managers, our firm's view is that next year is when the stock market will crash again. And it may go into 2013, and we believe that the crash that's coming is going to be even bigger than 2008, because in 2008 you had companies going bust. Now you've got governments going bust. The scale is so big. There is a twist in the tail, or if that's the right phrase, for the primaries. And for those listeners not quite sure what the primaries means, the challenging party, which of course is the Republicans in America, they have to choose a candidate to put up against Obama. There's about 8 or 9 candidates, but there's only about 3 or 4 who have got any chance at all to get the candidature. Now, what's particularly fascinating this year is that the chap who is first or second, depending upon which poll you look at, Ron Paul, who's a 12 times congressman, like an MP, he actually has very similar economic views to yours truly. And you'd think that that is totally unelectable, and normally it would be. But there is so much bad going on economically in the US that people are turning to Ron Paul in droves, because he, like me and others like us in the Austrian School of Economics, and one of these days We might talk about Austria in school. Certainly you can Google it and find out about it. We said that it was going to hit the fan, and it's hitting the fan big time. So that's why Ron Paul is up there. And I'll tell you what, if Ron Paul goes up against Barack Obama, I think you'll find the markets will just be decimated next year, because he's got a chance of winning, and he will not be good for bankers, which means he will not be good for the markets.
What would you say to anyone who is looking to the new year as a possibility to changing what their interests are, and they do decide that they wanted to play in the markets, and they're a complete novice going into it, but they think, no, 2012, I'm going to have a dabble. What advice would you give to people who are considering that?
Well, they will have heard this before, but they absolutely must never use up more than they can afford to lose. They must not treat. They must treat it like the bookies. They must treat it like the horse racing, in the sense that if they don't actually know what they're doing, then you go to the horse racing, you go and you get fish and chips and a pint or a glass of wine, and you spend and you lose 20 quid at Newmarket or Ascot or whatever. But you mustn't spend more than you can actually afford to lose. That's the first thing. The second thing is they mustn't even get into the market until the market crashes. Wait for the market to come to you, wait for a crash, then start buying. Don't do it today. And
would you say that there's any particular areas people should look at?
Yes, I would. Once you've seen a crash, whether it's 2012 or 2013 or whenever, it doesn't matter. Wait for the crash. Then I think long-term, that this is now not playing, this is serious, this is planning for retirement. Long-term, the places to invest in, I would say, are going to be those areas which are going to outperform inflation, because the more the politicians and central bankers print money, the more inflation we're going to have. So get into gold and silver mining stocks, gold miners, shorthand, and also get into agricultural stocks. In other words, companies to do with producing food. Because, even with high inflation, there's one thing we do every day, and that's eat. So precious metals, stocks, and agricultural stocks. Those are the areas for the long term.
Well, Jonathan, as always, a pleasure to talk to you. Thank you very much for coming on yet again this evening and doing this review of 2011. I do rather hope that come the new year, I'm going to be able to make you eat your words and there'll be some happy news to impart, because that would be nice, wouldn't it?
I would love that to be the case, and
absolutely.
My dream is to actually start saying there's light at the end of the tunnel. But when you've got $220 trillion of debt globally, there's no light. People need to get real if they're not already. All
right, Jonathan, Happy New Year to you and yours, and we will speak again in the new year. Thanks for coming on this evening.
See you in 2012. All the best.
Okay, bye.